Real True Education, not fake news. It's the 9th of April 2021. The weather is cold but dry. So this is Finance and Banking 17B22 updates. I'm just continuing on in a line. I'm having a problem with videos being banned, and that's just something I have to get on with. People say, why don't you move to somebody else? Well, I'm looking at Vimeo, I'm looking at a few, but a lot of them don't turn out to be anything like advertised, and they don't have the space and on their bandwidth and all that sort of stuff. So I'm just continuing on at the moment until I sort that out somewhere, and it'll take time. Now, thank you for looking in anyway, and that. But this is on finance and banking. There's their updates, and so I'll not mention the C word because it seems that if I put it in the heading or in the body of the presentation, it's banned. So I'm not going to mention anything to do with that. Now, one of the big things in the news is the collapse of Greensill. Greensill was a big investment company. It had an Australian founder, and it was one of these SPAC, special purpose acquisition companies, to finance business. Now it was financing Liberty Steel in a big way, and it had connections with David Cameron and did work and was involved with the British government, and I think it lost that contract for some reason. Now it's gone wallop anyway, gone wallop, and a lot of red faces are gone wallop, and but nobody knows yet who's holding the can, who's left holding the bag. What happens with these things is they're continually recycled in derivatives, in financial instruments, kind of insurance of an insurance of an insurance. And so each of these has to be examined, to see who is holding the bag. Sean Quinn was in on a Contracts for Difference, and he got stung for 2.8 billion. And he was the only one. He signed up, he signed the letter so they could come after him. But he could have offset a lot of that if he had to be wised up. He could have offset some of that to other companies, and they'd have to pay. Now, it baffles me, and it baffles many others, how that can be sustainable. How you can have a situation where, according to some reports, the derivative market is 20 times the ordinary productive market. That just baffles me. I can't figure that at all. But that's the way it is, and I'll be telling you more about that in due course. Anyway, nobody knows why it went down. They didn't do any due diligence, and somebody called them bluff. They had something insured or something for something, and they weren't able to cough up, and they're gone. But how much, and that is another day's work, because it has to filter down. Letters have to go around and see who's caught. But anyway, I'm just telling you that. Now, another one that's gone wallop is Archegos. And this is a Japanese-based company, and it was a private company, whereas the earlier one, Greensill, had some amount of regulation. This one, because it was a family company, it was entitled to run with nearly no regulation. And they were pumping money in there. One company there is this one here. It's Credit Suisse, and there are a whole lot of other ones there. All the big names are in there, like Goldman Sachs and all this. But anyway, this Archegos was set up by a fella that had been he had a bit of form in America, and he was in a bit of trouble over there. But anyway, the point is, he was one of these special purpose acquisition vehicles as well. And that sometime early last week, he had something insured, to use an ordinary countryman's term, or he had a derivative, or he had something covered, some loss he was trading, and he was asked to pony up, and he had nothing. He had no money. And the next thing was, the banks that wrote to him to pay up, when they realised he wasn't coming up, they sold all their shares off on the QT, and that should be a form of insider trading. I mean, they had insider knowledge. They knew he was broke. So there's an agreement among the financial world and bankers that if there's a situation where some company goes down, everyone's told, and any sale of assets and any sale of shares is orderly, and the public are not left a situation where a heap of shares from Archegos comes on the market, and like a URI or a pension fund buys them at the price, not knowing that the company's gone bust. Isn't that unbelievable that that's still legal? And there's the thing I discovered. Hertz Car Hire went wallop last year. It's a liquidation. It can never come back. There's no coming back. It's distributing out its values. Any cars are being sold off. All is done. There are still people buying shares in Hertz Car Hire. You can actually buy them because the liquidator will take any money he can get. That's stupid. Mostly in America, but that's stupid. They're buying shares in Hertz Car Hire, a bankrupt company. This is the craziness of this modern world that I struggle to get my head around. Anyway, to get back to this thing here, the big names got caught. They flogged their shares without telling anybody, and that should be jail. That should be jail, because they didn't notify people that there was a collapse coming. So they sold off, they got out. The next thing was, word went round, other companies started selling, and the share price fell to nearly to zero, and he's gone wallop. And oh, we didn't know, this is the usual, nobody told us. Oh, Credit Suisse, oh sure, we don't know anything about this. Goldman Sachs, oh sure, we thought he was alright. But that's the thing. So he got down for $20 billion, which is about 1/10 of Ireland's total debt. And I'm sure with Credit Suisse, I think that's how you spell it. It looks like sushi is Credit Suisse. I didn't look it up anyway, but all pensions that are in that or anything like that, they're all gone west. If anyone had a pension in there, it's gone west. Take that with Greensill, and now there's a good few of them going wallop. Now, one of the things it says, the markets fear regulation. So this is my point, there is no regulation, because if there was regulation, they wouldn't be fearing more of it. The fact is there's light touch regulation for many years. There was a big bust made after the 2008 collapse. That's all over. They're just lying back smoking their pipes and not doing their duty. So the reality was that in 2008, a lot of regulations were brought in all over the world, and particularly in Ireland, to stop the banks doing that mad stuff, to make them do due diligence, to make sure if they signed contracts for derivatives that there was some warning to people, that there was certain valuations, and they're getting around that by auditors in new industries like wind energy, etc., driving up the value of the assets, saying they're worth maybe double, triple time what they're worth, so as to bring in a profit. They can't do that with things like chemicals or feedstuffs or building products, because everyone knows the value of a door or a piece of timber or a bag of cement. But you can do it with things like windmills or electric car plant or anything like that. So you can do it with that. So that's why that renewable energy industry is a scam too, because the auditors are jacking up the prices. And I have the values, and I have a dossier done on that, which I proved that using 30 sets of accounts. Anyway, the thing is, what's happening therefore is the banks are regulated to such a degree that there's no more fun in it. They nearly can't lend much. And the Ulster Bank is going, the Northern Bank, Danske Bank is gone, AIB is still there, but it's shaky enough, it doesn't have anything in its pension fund at the moment. Bank of Ireland is closing down everything except the office in Cavan Town, I don't think it has any other one in Cavan that I know about, maybe Virginia, I'm not too sure, but it's closing down Cootill and Arva and Kingsford anyway, and we'll have no bank in Kingsford, and there's only one ATM in the Bank of Ireland in Kingsford, and very soon there'll be no cash money in Kingsford at all. So there's none in any of the supermarkets or shops. So what's happening is the banks are regulated so much that they can't get out in the market, and then you have the credit unions muscling in and allowed to loan, and as the banks reduce, the government's going to have to allow credit unions increase the amount to lend. And you'll probably say that's great, but the bottom line is the local who's going to be favoured. Will somebody go in, a cowboy, and get loans? And I know several cases all over Ireland and in the County Cavan where people got big ideas, big loans, borrowed a fortune, and never paid back a red cent because they knew the people on the committee and they got the money. And there's been now investigations going on into credit unions for years. Now I have to say none of that is pointed at my local credit union in Kingsford. I have to say that I have no knowledge of it at all, and I'm not a member. And I'm a member of a Dublin-based credit union. But there are shenanigans going on in credit unions, and maybe I just wonder whether it's a good idea to replace them with the banks. Now the thing about it is that when the banks were tied, when their hands were tied together, and they couldn't lend due to the restrictions, what they did was these SPAC, Special Purpose Acquisition Vehicles, with no product at all except to lend to industries like Greensill, like Archego, were established. And they were not regulated at all. They could splash it out anywhere they like, throw the money out to anywhere, any business, anything they liked. And they borrowed from the banks, They borrowed from the banks. They went to the bank and said, look, we have a great one here. We want 20 billion of you. Give us 20 billion there. We want to throw it into some company. And they did. And that's what happened with Greensill and with Archego. And I wonder, will there be more? I just wonder, will there be more? So what you're seeing is this totally unregulated financial vehicle, the special purpose, the SPAC vehicle, which should not be legal. I mean, several American commentators have said they should be illegal. They are doing what the banks were stopped doing. And they're no wiser than the banks were, or the credit unions. And so we have those two gone wallop. And it just shows you can regulate all you like. There's a way around. It's been circumvented, as they say. I wrote it here somewhere. They have no product. They borrow from the banks. Any money you have in the bank, and they splash it round. And they take their own big cut. They take a huge cut. And how they work is then they have it done in such a way that they can't get caught. They can't get caught. If the thing works out, they get a lot of money out of what has set up, and if it doesn't, they just walk off and leave the pension funds and all that holding the can and the banks. So banks have no interest in Ireland at the moment. That's quite obvious. They're pulling out of here night, noon and morning, and there's nobody that we have elected has even think about it. You mightn't even talk to a member of the Dáil, a Chop the Dáil, a TD, and yet we vote for these people. There's no alarm, there's no interest, they don't care. It's, I don't know what's going on at all. And as I say, when the economy busts, they'll take everything we have in the line of state assets like Irish Water and all of that stuff. So credit unions are, if they're to replace banks, they're going to have to be allowed to lend a lot more money. I don't know how that will go. So that's the end of that, folks. I hope you enjoyed it. Give it a thumbs up. I hope YouTube doesn't put it. Give it a thumbs down. And we'll see you back for something else. I'll comment underneath my videos, and I'll tell you what numbers are banned and what aren't, so you'll be able to see from that. So bye, folks, and we'll see you back. Thank you.